Hello, folks. Welcome to Market Trends. I'm David Russell, VP of Market Intelligence at TradeStation. Great to see everyone again. I'll just start with our disclosures here. Now, a little reminder that we have a blog post on the TradeStation website and Market Insights that will give you some kind of pointers or guidance of the things we're going to be talking about, a little bit of a kind of summary and outline. Go to tradestation.com, go along the top to where it says research and then insights. It will take you to the blog. The blog has an article on it with a Wall Street sign. And that is essentially the summary of what we're going to be using today. Let me just quickly show you. Go to TradeStation, go to research and insights. And then market stair steps higher as Fed passes. Market trends this week. So we published this the morning before our webinar, and we have the key points. We have some workspaces which are available if you go to this link right here. And then the ideas I published in TradingView are available here. Excuse me. I wanted to show you that I'm actually working on an idea right now on Marvell. And I'm looking at this kind of tight squeeze of the upside as a semiconductor company. However, at the time we're speaking, it's interesting to actually look at the market here. So I'm going to go into, all right, so let me just show you. If you go into the zip file here, downloads available here. If you go into the zip file, this is what you're going to see. You're going to see one folder. Go down to that folder. These are the PowerPoints with some information for you. And then these are a series of easy language files, which basically have a bunch of indicators in them. And then these blue items are the workspaces that we're using. So you load the indicators before you use the workspaces. Let me just close that now. And I'm going to bring up some of these things right here. I have too many things open. Actually, I have this other thing. See, I have this other thing open that I've been looking. Let me make that go away. Sorry. All right. So here's what we start off. Well, I'll just start actually with this one. This is an interesting thing. The S&P 5. This is our ES special kind of workspace. And for this, we look for 2 or 3 signals to be giving what would be considered potentially bullish or bearish, pattern. Earlier today, stochastics were overbought, and that was the bearish thing. However, MACD was rising, and the 50-hour moving average was rising, but then MACD turned negative, and we were coming off the overbought. So that was a little bit of a bearish confirmation here to the downside. However, in my view here, we're in a situation where when you really look on the daily chart, as we do in our blog posts, there's not a lot of there's just not a lot of bearish signals right now. And so I think right now you don't want to make huge decisions based on hourly charts. In my view, you need to at least have a sense of the daily chart giving you your main kind of signals. So we look here at MT main, look at the S&P 500. SPX.X. And when we look at this here, I mean, made a new 52-week high today. We're above the Bollinger Bands, but at this point, there's really no kind of of negative signals in any clear way. There's a few things that happen on a kind of intraday basis that I'll just kind of quickly show you. Let's just open up a new workspace really quickly, bring up a chart. If we look on the daily here, I mean, let's just go like a 15-minute, candlestick. We can see that, our high was early in the day. That's usually not a great sign, but at the same time, that's especially bad when it happens on a Monday, in my opinion. On a day like this is not the biggest thing. The fact that we had a Fed meeting yesterday and we actually opened higher today, in my opinion, it's kind of interesting. It's not a normal thing to see that. Often you're going to see that the move to the downside following a Fed meeting. So let me now show you the VIX, which is one of the things that I'm watching here. Is I mean, the VIX has barely been squeezing down to like some significant lows, and it's just kind of, squeezing off the lows today. And that's, given a little bit in the last couple of hour or so, a little bit of a squeezy panic off the lows. But one of the things that was happening at the same time was that the 10-year yield kind of had this little, break higher. So, you look at these little kind of, little blips like this, but in many ways, they often become buying opportunities for people who want to be on the long side of equities. And the reason in many ways is simply that, these are counter trend moves, and the trend here is, significant, pretty broadly positive when you really look at the market here. And I would point out, for example, look at some of the things we mentioned here. These tight ranges that we've been seeing. To me, this is actually kind of the most important thing. I have this workspace here. These are just the different charts I use to basically generate, those things. Essentially, I use this one, but really interesting to me is you can see these tight ranges, just like right here, continue higher. It's at different points. The market is not pulling back really in any significant way. And, it's hard to really say that that's especially bearish. So I think at this point, I'm just kind of, I'm viewing it now increasingly as us being in a market that is not going to be the best for trading indexes, because I don't, VIX is squeezing up a little here, but at the same time, I mean, the moves to the level of the index are getting smaller and smaller. And it's gonna be more the opportunity for looking for individual stocks. And, we're gonna just kind of do that, especially earnings season. It's gonna be interesting to watch for things that, rally and pull back and stuff like that. So, in my view, like this market now, this exact moment of speaking, the Dow is up. We're looking at a record number of ups on the Dow Jones Industrial Average. That almost creates right there an incentive for the market to go down, because people like, I'm not going to be the fool who bought the 14th day up or something like that. There's that natural expectation of some kind of like pause. But when I look at this over any kind of longer time frame, there's not a lot here that really gives a lot of bearish signs. And this is a lot of the stuff that we have been talking about. So let me just kind of quickly look here at the points I want to make. If you look here if we jump back over here to the S&P on, there was a treasury auction today. And, I think that we just have a little bit of information at this point that makes it hard for yields to go down very much. But one thing that's interesting to me is we had this high here on the 14th, and then we held it on the 20th. So to me, this has been what we've just kind of been seeing. For this one, it'll be interesting to see, if this turns into a false breakout. I mean, that to me is the biggest kind of concern. It would require, a close below yesterday's lows. I think now, I'll be honest, as this is taking shape in the afternoon we speak, I think we have to be on guard for this getting more ugly and people trying to push this low. I think right now, the memo is essentially out that when you look at this, there's a sense that that the Dow at this point needs to be, is going to have a red day, and people will not be rushing to buy anything. So I am not. I'm looking at this as it happens, and I'm just kind of saying how things might be, and I think that might be the kind of takeaway from this. So these sort of intraday things are difficult because a lot of times, you get stuff right on the daily chart, and then strange things happen intraday. So I'm not going to try and be too clear on anything. I will say simply that at this point, all the patterns on the daily chart remain relatively positive. The advanced decline line continues to advance. We have this RSI being overbought, but that is overall not really a bearish thing. If you look at a market that's truly trending higher, it can remain overbought for a long time. We did this article recently that also kind of showed the mix of price performance being, skewed in a bullish direction. I'll actually show how you do that using our workspaces here. If you go over here to the MT main, Wait a second, sorry. And you look at the key ETFs, and you look, for example, in the last, week, we can see energy and financials are outperforming. Semiconductors and tech are kind of outperforming. And then we can see that the safe havens, for the most part, are underperforming. We had a really big rip in the healthcare ETF. It basically it had kind of come down to this low, and United Health reported decent earnings, and it just had this real rally to the upside. This is, to me, somewhat interesting, because I think that at this point, when you look at it, the health insurers they've really taken a beating, and their earnings have not been that bad. So I think it's going to be interesting to see if people come to this. But at the same time, right here, we're in a situation where today's economic numbers, I think, are really going to. I'm just watching it. I think it's like I said, we had that failed breakout, and I think now people are starting to get kind of on the short term more leaning on the bear side. So it's just kind of a day trading thing. We got above and we failed to stay above, and that's what bears like to see. All right, could I please share the folder for downloads, please? So if you go to this blog post, I'll share it, but it's basically right here. It's funny, sometimes things emerge right in like the half hour, 45 minutes before my webinar. And I try to keep my focus on daily timeframes, but you still sometimes see things intraday that have a degree of relevance, and you don't want to be on the wrong side of. Now, I will say that, and to me, this is a signal we've been talking about, and the problem with the signal like this is that it can fail to give any. I mean, it can be wrong for to a certain extent, and this is the crossover on that we had identified, which was that when the number of stocks above the 20-day is less than the number above the 50-day, then that's actually a sign of to be exiting. And that we had that all the way back here like 2 weeks ago. In my view, it's a pretty, it has been proven, and we did the back testing on it to show that it actually has kind of been a very accurate sort of signal. But but the thing that's interesting about this is it's really no good on the short side. So it's only good on the long side. So what that really means is just because it turned not bullish doesn't mean that the market was going to be bearish. That's kind of my takeaway from from this from this. But at the same time, it is one less argument. This is the only thing I see now that is not really much of an argument in favor of the bulls. The other consideration would be, and if you do look at the VIX, it's funny, some of that point things out in articles, and I find that actually I'm just early. This has been one of my problems sometimes, I'll admit. But I notice how the VIX has been basically refusing to break down to these levels. So it wasn't confirming essentially the highs in the market. And I think maybe now we have to be to start to be wary of this. I pointed this out a week or two ago, and it didn't work. But maybe now it does work. This was a signal we saw before, and maybe it's time actually now to be more cautious. Some of the signals was really starting to get in just the last 45 minutes here, seem to be pointing more in that direction. So I think I want to be just highlighting that at this point in time. Now, I think we also have to just remember that we had some amazing. I mean, the economic news today was really phenomenal. We had jobless claims go to their lowest level since early in the year. Continuing claims have come down a lot, which is a sign of a strong labor market. GDP just crushed to the upside, and if you look into the internals of the GDP report, that is, if you look on some of our market trends, like a month and a half, 2 months ago, this is what we've been talking about: massive investment in factories, enterprise level spending, and it's now trickling through. So, to me, this is something that is, a positive over, months into the future, but it could also be a little bit of a scary thing in the short term. When you see GDP crushing, when you see the dollar jumping, as I think we're seeing here, let's just look over here at this chart, the dollar index, for example, DXY. I mean, there's a bullish outside day on the dollar index. So these things to me are just something now that are kind of In the near term, they're kind of scary, and I don't think any of this changes the trend that we're in, but it does make people a little bit nervous. So I wanted to just kind of, emphasize this. The economic numbers, the durable goods orders, massive. 4.7 versus 1% expectation. X transportation beat as well. So, I mean, we're looking now at, some numbers that are, it makes it hard to even dream of the Fed cutting interest rates this year. I mean, just like unfathomable kind of to even think that. And if that's part of what people are thinking, that is a little bit of a headwind. So, I'm just looking now at some of the things that was interesting to me, if we look over on our MT main and we look at, this is the measure of value versus growth. We have it here somewhere. This one. And if we look, we actually start to see, now this isn't so much true, like the value is taking a hit today, probably because we're seeing weakness in, I don't know what we're seeing weakness in. Financials are taking a hit. That's dragging on the value side. But we were starting to see more of a move toward, this is the value and this is the growth. But see, all these things are now kind of shifting with the strong numbers from Meta and everything else. The way that I have created this to be used, if you don't know, is what you basically can do is you can look at different time frames. You see, like in a trailing 1 month, you can see these are the areas that have been strong, and then there's other areas that have been kind of lagging. It is interesting to I think see energy, and we were talking about the underlying improvement of energy fundamentals here. And in my view, tomorrow we have Exxon and Chevron reporting earnings. When you look at the numbers that we have seen economically, to me, it's a situation where the energy fundamentals are simply skewed in a positive direction here. You have just tight inventories and GDP of this kind of magnitude. On top of that, the Chinese came out and said they're going to start trying to stimulate their economy more. Now, I have been, as most of you guys know, very negative toward China for several months. I have been saying that their debt problem was bigger than people estimated. I was comparing them to, other cases of countries that had export booms with debt problems, like Latin America many years ago, or even Japan. Back in the late 80s, early 90s, the similarities are significant. When you have when you have too much money and you make bad loans, and then your growth slows down, it all happens at the same time. However, at this point, the Chinese are basically talking about stimulus, and in the near term, I think it makes it something where you have to take that seriously. So I wanted to just kind of, highlight that as well. I think that that's something else at this point where that's going to be a potential positive for energy, potential positive for metals, and a potential positive for some of these Chinese stocks that have done poorly on a year-to-date basis. You can see that when you look at the over here, the industry ETFs. If we look, for example, in the last, I'm just looking here, the KWEB, this one, this has actually picked up some just in the last week. See, this has really gained. You can see here, the thing I like about this view is you can see that you can see that this thing is up 9% in the last 3 months, but 6 percentage points of that 9, 2/3 of that gain happened basically, in the last week. So it kind of shows you that it's just starting to kind of gain traction now since China kind of, made those statements. But I think at the same time, the thing about this to remember is that, I hate talking about both sides of my mouth here. I mean, it's difficult, but I got to say what the data is. The price indexes in the GDP report were dovish. From my perspective here, we are in a Goldilocks scenario. It's just a really tricky thing to, to exactly catch it, day by day. And I think people take a step back and over a period of, a week or two, people are going to say, this is a very positive environment. Inflation expectations are not going up. as GDP accelerates. And it's hard to argue with something like that, which is why I continue to view this as, very similar to the 1990s. There was also outperformance in the small caps, but I'm not even sure at this point they were doing well, and then they got hammered today. I'm just looking at their performance. Everything kind of flipped around a few hours before the webinar. So let's just go through and look at, cover some of these other points I had here. I mean, everything from the central banks was totally as expected. The question simply comes down to, at this point, the focus on earnings. It's interesting to me when you look at something like Microsoft here, because I think some of these names, when I kind of look at the opportunities that are going to be happening, Microsoft had, less than amazing results. And, I think though it creates an interesting sort of setup, because you don't have to be in any kind of hurry now. Now's the time, if anything, to be looking at, some levels here where, Microsoft at this point will probably kind of grind lower. We did something on Netflix as well, and we were looking at, let's see if Netflix can get down and really nuzzle down toward like 411, 413 area. This was a low from here. It's a 50-day moving average. And, stocks like this, I think if you plan and you wait and you say, all right, we're going to think about this over, let's try to consider, entering in the next week, not now. Let's see it kind of nuzzle the 50-day, get down there and just sit there and pause, and then wait for it to, that does it make a higher low on the daily chart? Those sort of signals, not right away, the first sort of, of rally. Look at how, very often when something is trending lower, you're like, oh, it's good down here. I like it. It opens higher, and then it, basically you see the solid candle as people sell that early strength. And the question now is on something like this is, does it kind of flip around and we start to actually see, some higher lows and the price closing, closer to the high. And at that point in time, I think is going to be a time when it goes down there and it stops going down. And that's when people might start to actually, be active in it. So I think Netflix here and Microsoft are both going to give opportunities to grind down to support, and then give some potential, sort of entries. What does Goldilocks scenario mean? I hear this term mentioned a lot on the financial channels. Well, it's the idea of Goldilocks with the three bears, when the porridge is, one is too hot, one is too cold, and one is just right. So the idea is that you have a growing, the economy is good, but it's not too hot. The economy gets too hot, then inflation goes hot. But if you can grow the economy in a way that you don't have runaway inflation, then the Fed doesn't have to hike rates and the economy can grow, which is good for earnings and incomes and everything else. And I think that's kind of, that's the meaning of it. And it's really what we have. If you dig into the, let me see, I look at this thing. Let me see if I can get this to pop up. This may or may not be, and it's the first estimate of GDP. I look at this thing on Econo Day. I have it bookmarked. It doesn't have the actual, it doesn't have an estimate in here for the inflation number, but the inflation number in the GDP report was very benign. All these things, when I look at them, there's this thing from State Street that still showed people were negative. If you look at the AAII number, the American Association of Individual Investors, it went above 50 last week. And now it jumped back, it fell back under 50. So for me, I like this because it kind of just shows that, there is not a sense here of people just being cocky and complacent to the upside. I think people right now are terrified of this market as it goes higher. And, bull markets can be hated, as people say. And I'm seeing all the signs of that, right now. So I wanted to just mention that. All right, when we look at some of the signals here, I had done some kind of just quick, looking, signals looking on, especially my MA, on my MA tools. I noticed yesterday that American Express had pulled back to the 50-day moving average. And I've noticed in this market that this signal has really not been working enormously well. I have found that short-term signals have been the best sort of indicator here. And in this case, we had the 8-day crossed under the 21-day exponential, and there's really no clear sort of signal here. I thought that was one that I wanted to kind of highlight, but it's not holding. And I think this is actually one of anything now that this could be people looking, feeling in a more bearish mindset here. We have a level down here of 150 on American Express. You're in a range. And when you're often in a range, once you start moving away from one extreme of the range, in this case being the higher one, if anything, it gives that gravity in the other way. So at this point, it almost looks to me like a name like this has really not been a good name. I mean, the banks have been good. JP Morgan has been on fire. A lot of the banks have been good. Morgan Stanley and Goldman both rallied well. Wells Fargo did well. And then if you look at, there are a lot of the regional banks kind of came jumping back. And then you look at American Express, not so much. So I think right here, this is actually one where it's testing that level and it's not working. And I think this is just something that pops up from my scan. Another one this was one that I had talked about previously, which was the trade desk. We had talked about this. Then the next day they added it to, I think, the NASDAQ 100. It ripped higher. And then yesterday we found this pullback to the rising 21-day, and here it is jumping today. Which is kind of interesting. So I think that's one that I wanted to kind of mention. Right, everything is kind of at the low now. It's like I said, we had that false breakout, and people are just hitting the sell button on a lot of stuff now. As I'm kind of looking over at another screen here. So I still think it's important to realize, though, that there is nothing on the daily chart when you look at it that is, in my view, hugely bearish. We could be setting up, though, for a bearish outside day on the S&P. Looks like we're getting close to it, and that could be a concern, for people. Yesterday was actually a bearish outside day as well, but it wasn't, like very meaningful, especially when you consider the Fed and everything else. So a lot of these things it was interesting. Actually, Salesforce is one that continues to look pretty interesting to me. This is one that we had done a trading view idea on this tight squeeze, got that breakout. And now, it's basically holding above this level. Of the ones we did last night that seem to maybe still have the most validity, this is one I think that kind of grabs my attention. This and energy seem to me to have, some of the most, maybe potential at this moment in time. Let's take a look at the USO oil ETF. This was the level back when OPEC cut production in April. And, I think at this point, there's a potential here of energy actually. Now that the technicals are starting to improve upon it. I don't know. At this point, to me, energy seems like it might have some pretty strong momentum to the upside. So the relative strength has been there in energy. We had flagged the fundamentals that were there, and I think that's just something that we might want to keep our eye on for opportunities, especially with Exxon and Chevron reporting in the morning. Could you go through the importance of an inside candle? Well, this is not an inside candle. The outside candle is a signal that when you have a higher high and a higher low. So if you actually, this was actually not an outside candle yesterday. Let's see. Was it what you can do is you can go to TradeStation Studies, you can go to Ad Studies, and you can go to Show Me. let me show you, go to show me, and you go to outside. I think it's called outside bar. And it'll put a purple dot. See, that was an outside bar. So it can be a sign of a reversal pattern. Now, I'll be honest, I do not believe candlestick patterns have been working very well for in recent memory. So I don't really pay that much attention to them. However, we get a big, massive smear on the chart like this, that could be something that people try and, you know, push harder on. I wanted to actually show you guys. All right, so here I have a new chart, and I'm gonna now show you the kind of platform feature of the day that I wanted to show you, and that is the Bollinger Bands. And you know, it was interesting to me because I noticed how Bollinger Bands were kind of working for you know, Delta Airlines. You know, for me, I have been you know, pretty interested in the airlines here. We had talked about a while back in early June. We said that, you know, the thing that seemed to have the most upside potential was the airlines. We then talked about how there was the upside potential in the banks, and you know, people who would have used calls in those could have done really well. So I think that was, you know, those were good trades as you look at that kind of you know, squeezing breakout that we saw coming off these lows. Very often, what's been working in this market has been your kind of squeezing breakouts. That's what we had in the financials as well. But now we have something very different. Now we have the potential for continuation trade. So I did this trading view idea on Delta, and I'm going to basically show you, you know, essentially how I found it, you know, using TradeStation, which was I basically, you go to studies and go to add study and go to Bollinger Bands, right? Actually, we're going to add two things. We're going to add Bollinger Bands and Bollinger percentage B. Add these. Let me bring these in. Now, I don't like the colors on my Bollinger Bands. I'm going to leave them on. So what's interesting about this name is that it was basically at the bottom of the Bollinger Band. Now, what's also interesting is you can see how the bands tighten. The thing that can be kind of good about this after something makes a good move is that basically you can see you know, when it moves a lot like this, it basically means that it has that potential to move either way. But then when it starts to stop, when it starts to narrow, it gives a potential for it then to have actually, you know, a support at this tighter range, which is pretty interesting, the way they can kind of catch up for you. So I thought this one was interesting because the thing is when you look at this, the fundamentals in this remain very much intact. We're in this sort of cyclical, you know, this strong economic environment. The other thing about this one was I looked and I saw that, well, I don't have it on this chart. If I now go to data, add some, I'm sorry, data edit symbol, I'm gonna do like change this to 3 years. You're gonna see that this level is actually the high from last year. So at this point, it's trying to kind of hold this high from last year. And the other way now thing to look at is Bollinger percentage B. So when this goes down to this line, or when it goes down, you know, below kind of, you know, 20% or something like that, what it's telling you is it's telling you that that it's near the bottom of the Bollinger Band. So it's similar to the other thing I've created, my Keltner pullback indicator, which will show you. I can actually add that. You guys have that from what I've given you. I have this thing I call Keltner pullback, and it does the same thing. It basically, well, something similar. Keltner bands, Keltner channels are calculated differently, but they have a similar. Just I'm gonna edit this. It popped up. If you don't notice, it popped up in the same study. So I'm gonna go. I clicked on it, and I'm gonna go to scaling, and I'm gonna change it to subgraph 3. And you can also see in this case that this is down to what would now be considered an oversold sort of level on American Airlines. So you can also add this to radar screen. So if we now go to radar screen, they're trying to take out yesterday's lows on the S&P. So let's just add a bunch of stocks like DAL, Apple, Meta, you know, Nvidia. change that to daily, okay? And now we're gonna go and just really quickly go to studies and then go to Bollinger, the percentage B. And you can see now this number. So what you can do is you can just like, let's add the whole NASDAQ 100, for example. And now what we can do is we can sort, make sure you change it to daily though, right? And you can see here, if we just do this really quickly, let's just link these. Honeywell, it's kind of, they must have had a bad earnings report today. I have not looked at them today. Some of these other names, these are not really big names anyone knows about, but there you go. There's Netflix. Isn't that interesting? Intuitive Surgical. There's another one that popped up for me because this company had a decent earnings report, but it had run into the report. It is in healthcare, which has not been the strongest part of the market. But there's another one here that I think is going to be interesting. I also was looking at this, and this is near the 50-day moving average, and see if it can hold that level. But Intuitive Surgical has been an interesting sort of name. ISRG. You can see a lot of these right now. I think that people are just kind of, yep. Now we have a bearish outside day on the S&P 500, a large bearish engulfing candlestick. So I think now we have to kind of, now we have a signal that would be, see, now something of a kind of, of a signal that might cause some people to be a little less bullish overall. So I wanted to just, mention that. And, we didn't have it before, but now it is popping up as a potential signal. And people are starting to look to the downside. The first one that popped up for me was the thing I mentioned about American Express. But look for some other things. So for example, one of the things we can now look for, we can flip a lot of our indicators around. Let's go to MA tools and let's see if we're gonna now actually find things. Let's change, there's a tool we haven't used for a while, MAX days since. Now this is gonna tell us when the 8-day, we're gonna find stocks where the 8-day recently crossed under the 21-day. So what I'm gonna now do is, I'm gonna add a label row as a blank there. And now what I'm gonna do is, these stocks all recently had a negative kind of crossover, and now I can start looking at these. Let's take a look at these now. Is Alaska Air. You can see the 8-day crossed under the 21-day. What I kind of like to see are the ones that crossed under and have kind of sat. So what I'm going to now do is I'm going to add my 5D study as well, which you guys have, which is basically your 1 week change. Here it is. All right, now, of the things that had a bearish crossover in, say, the last month, right? You might find there's some that have basically, and we look at these. So this one, for example, Pod, which is some kind of insulin company or something, they were added to the S&P recently. This had the bearish cross all the way over here, and now look at this. This is now, consolidating, and not looking very pretty at all. So this is kind of interesting. This is what we're looking for. We're looking for this kind of potential consolidation following the bearish signal, or we're looking for a positive move. So I'm going to now go here to the 5D, and I'm going to now look for stuff that is kind of slightly positive since the bearish signal. This was one. This is actually Glowworm. This is what do you call it? Corning. Discover Financial. Now here's one that had a bad earnings report. It had the crossover. It tried to rebound. That's kind of interesting in my book. I'm getting alerts on my other screen. Verizon and AT&T are such weird cases with this whole toxic telephone cable thing that I think we need to be careful because this is something that is kind of a crazy thing in the market that might actually not be as much of a fear as people think. I mean, they've had these cables in the ground for a long time. And to think that it's going to suddenly bankrupt them, even if it's a bad thing, I think you got to be careful, assuming it will really remain a big problem. I'm looking at some of these other signals here. Let's look at Las Vegas Sands. This one has really been a dog. It tried to have, it had a failed breakout earlier in the year. It's not actually. Anyway, I'm just trying to find these as I go. I mean, I was expecting the market to remain more calm than this. So at this point, I think we kind of need to see how things settle here, but then also realize that what I've been looking for is I've been looking for basically things that come off of earnings and have some, kind of potential. I often have tried, and I'll tell you, this has not worked as well as it used to, which is basically let things rally from earnings and then pull back. Usually they pull back and then they just keep going down, or they die. Usually you get the frenzy of buying off of earnings, and then they just, they'll run for a week or two and then they kind of stop. Let me look if there's any other notes I wanted to mention. There were some names that had popped up in my book. So one of the names that was interesting to me was MSCI. Now this company, they do a bunch of indexes for the for stock investing. And what I think is interesting about a company like this is if we are in a bull market like I think we are, this company is a secular growth stock that is in a long-term sort of basing pattern here. And I think this is one that is potentially setting up over the longer term. Another thing that was interesting this earnings season was Domino's Pizza. This company has this new deal with Uber, and what's interesting is they actually came out and had a bad earnings report, and no one cared because of the Uber news. And now they're going to have this partnership. This is one that I think could be very interesting when you see a move like this. The thing that's interesting about this is now a completely new story. We've talked about, the 7 catalysts for stock movements, and one of those is business transformation. When you have a transformative partnership with a company like Uber, that basically means anyone with Uber Eats can just hit a button and order pizza. That is the sort of thing that can change the entire nature of the company, and that seems to be happening with Domino's. Another one that was interesting to me that I want to just mention. These, like I said, these have not been working, but this one had just popped up to me because it made a new high and then it pulled back, which is Acadia. It's a biotech stock. Biotechs have not been strong, but this is one that might simply merit a little bit of research because they've had some interesting news in them. And so what I often do is I look for stocks that hit 52-week highs and then pull back from those highs. And this one popped up on that list. We had also done an idea on TradingView to kind of highlight what was happening with Netflix. And I think if you guys had seen my webinar on Monday about options for earnings season, we had talked about the risk in a name like Snap. And that one worked out, pretty well. And to me, this is one that was a classic example of bearing in mind when you have a range, things go up the range, and then you look for them to go back down and fill kind of the range. In my view, a stock like this, when you see this kind of trend, and it hits a high in the range, that's a good opportunity for it to basically pull back, and that's kind of what you see here. And a name like this now, in my view, might have continuation, to new lows, because there's really their business is not doing particularly well, and then the other thing is that they've had a year to consolidate. So from my view here, a name like Snap could see kind of continued downside pressure. Let's take a look at just some of the other things we have here. Some of the other I want to look at the the breadth. There's, like I said, there's really not a lot of, all right, so this tells us how many stocks are making new 52-week highs. We continue to see new stocks making new highs. The advanced decline line kind of weak today. We have this bearish outside candle, and we have this indicator of the 20-day versus the 50-day companies, giving us, kind of cautious signs. I want us to see where the VIX is. The VIX is now, I think, back above 14. And the bullish outside day in the VIX. In my view, the thing we might want to be wary of here is a little bit of continuation to the upside in the VIX. A little bit of after a bearish candle like today, we're probably going to see some people try and kind of hit the market and try and be taking some profits. And like I said though, from my perspective, when you look at the kind of internals, you look at things like the inflation, I think it's going to be hard to see much real sort of downside. The area that we had been targeting, we had talked about this level in the S&P, which was basically a weekly high, around like kind of, I think it was 45.13. That to me would be the level to look, for potential support. But I'm also kind of, at this point, this level up here, I'm sorry, this level, the high from March of last year, I think needs to remain our focus to the upside. If we don't get much follow through and really break the trend, there could be continuation up toward those levels. Disney. Well, I did a bearish thing on Disney a while back. And let's actually see when they report earnings. Pretty sure I have that on my, I don't have it. If I go to DIS, I'm pretty negative on Disney, and I believe that the problem with Disney is, well, there's a lot of problems with them. They report on the 9th, but I think Eisner, whatever his name is, Eisner, I think he needs to go away, and I think they need an activist to come in and just break the company up, because at this point, it doesn't have the magic it used to have. I think that you have a bunch of weak businesses. And when you have a bunch of weak businesses, then you need to break them up and manage them each separately. Like the TV business, that would be nice. Amusement parks, movies, these are separate businesses, and honestly, none of them are that good. I think the other problem with Disney is, like, people are going on cruises now. I don't know if Disney, I don't think the traffic's been that good at Disney, at their amusement park. So in my view here, Disney here is setting up for likely continuation to the downside. And unless they get like a new leadership, I know, like, what's his name has historically been a really good CEO, but I'd say he's a good general, he's a good leader, but not for this fight. They need a guy who's going to come in there and do strategic actions, and I don't think they have the stomach for that now. I think this company will continue to struggle. It's pretty amazing to consider the fact that Dow has been rallying and Disney has been performing this poorly. I'll say now that the things that pop up to me, I think that energy here is the obvious. If I have a takeaway for right now of anything that kind of has that upside potential, to me, it would be something like energy, something like Marvell at this point in time. I think this can kind of chop and squeeze here, but there's probably no real rush. I don't think that there's anything that really argues against the growth trade or the AI trade at this point in time. And I would say that something like Marvell here, it's kind of, see if it kind of works down to some of these lows. That might be something where people kind of step into it. But I think after today, with the bearish outside day, we're probably going to see some people try and hit the market a little bit tomorrow. And the question will be how we hold on that. And then if we go to the weekly chart here, the S&P. I mean, there's really nothing here that really gives any kind of significantly negative signal. We're seeing basically higher high, higher low. And this is the kind of market, I've said that the market goes into phases when you have essentially the market goes into phases when you have individual stocks doing well versus the market overall. And I think right now there's probably not a lot of, for people who want to really get buried up and try and hammer it with the indexes, I don't think there's going to be much opportunity for that. I think it's more a question of letting things get kind of beaten down, and then if you actually look at it on like a 5 or 15-minute chart, it looks so bearish. Like if you look at this, let's just look at this really fast on like a 5-minute chart. I mean, you look at this and it's like it just looks and feels so bearish. But then when you zoom out and you realize, like, wow, it's basically holding these levels. See, this is a sort of market where it's like it chops a little lower, and then you realize there's just no sellers left, and then a wave of buying comes in. And I think that's kind of the view I would have now, of little more weakness and then some continuation, and then kind of the individual names that might come out of earnings season. Do I look at ticks and TTM squeeze? I don't really look at ticks very much. To me, it is way too, I mean, it's just too short term. My approach is I'm essentially trying to do things here with daily moves, and a failed breakout like this, like I said, a failed breakout, once we turn red for the day, I think the bears had a green light to come in and try and, do some damage. The question though is, with Apple and all these other earnings coming out next week, do we see real continuation in that direction? And my estimate would be likely not. I think we're seeing here that even something like Microsoft is not something that was something all that bad. Netflix, not that bad. And I think it's going to be hard for people to really justify any kind of significant selling. I continue to think that there's a lot of money on the sidelines here. I think sentiment remains overly bearish. And I think that when people take a step back and look at today's economic reports, I think we're more likely to see earnings estimates revised higher, GDP revised higher. And I think in the next couple of weeks, you're going to see more strategists raising price targets on the S&P 500, because, all the things that go, all the inputs that go into those formula are positive. And the one risk is the Fed, but we don't have the inflation side anymore that's really driving that. So that's kind of my view of things right here. And I think that when we're in a market like this, the pullbacks will remain very tight. And if we look here back again on the daily chart of the S&P, we're just now at the 8-day exponential moving average. And I think I don't have time to get into different moving averages, but I think at this point, a little bit more to the downside, people are going to look for some other moving averages that are going to give relevance. But I think that that's kind of be the place where people are going to be. They're going to be looking for something, probably, even holding above the 21-day. I had been thinking of a pullback down to these highs being necessary, but I'll tell you, after the data we've seen and everything else, to me, that's not necessarily the case. So for me, even something like 4,500, that's 1% more to the downside. I'm not sure if we're even going to see that. So that's kind of how the operation, the assumptions I'm working with. So do I think it'll hit all-time highs in August? I don't know if it'll be August, but we're getting close. My view here is that this market is I think that the odds favor new highs this year. I'm in Tom Lee's camp. I do believe that people are too negative, and I think that like that State Street survey shows, and climbing a wall of worry doesn't always work, but it has been working recently. So from my perspective, in August, I don't know. I think my view is that the odds at this point look for this high here from March, and then after that, let's see what happens, because we're gonna have Jerome Powell at Jackson Hole. We have payrolls and CPI. coming soon, and we could very well have a hot payrolls and a cool CPI. And I don't have any idea what the market's going to make of that. So good talking to you guys as always. I wish I could be of more help. Like I said, the things that seem to me to have the most sort of odds and kind of in the favor here would be something like energy into kind of the earnings tomorrow, and then on top of that, the opportunity of S&P getting kind of closer to 4,500, but likely holding above it. So hope you guys have a great day, and I'm actually traveling next week, so I will not be with you, but I will see you the second Thursday of August. Take care.